How did the American dream go so wrong? When you look at statistics, you can see that achieving the American dream through hard work, determination, and initiative is becoming more and more impossible. As of 2021, rent consumed more than half the income of more than 11 million families. House prices rose beyond what 69% of estimated households could afford, and more than 4 million households were on the verge of eviction or foreclosures. And in major cities such as San Francisco and Chicago, homeless encampments have surged dramatically. A Wall Street Journal just asked 759 registered voters what they thought of the current economy. And as you can see with the graph, you can see that a trend appears in that we have been getting more and more pessimistic as this year has gone on. What's more concerning in the recent poll, which Wall Street Journal did, asking voters whether they think the economy would get better or worse next year. As you can see with the graph, a staggering more amount of people think that the economy will get worse next year. Young voters were more pessimistic. Roughly 6 in 10 of those aged 18 to 34 expect to be worse over the next year, while 42% of those 65 and older feel that way. Also, when asked at what degree will this put financial strain on your family, a staggering more amount of people answered that it's creating major financial strain over minor. Young adults, many burdened by financial struggles, are now living with their parents at a much higher rate than people at their age 50 years ago. The proportion of young adults who live in a parent's home more than doubled between 1971 and 2021, from 8% to 17%, according to a recent Pew Research report. In 1972, it was estimated that the median price for a home was $26,800, which amounts to roughly $190,000 in current dollars. Since then, the home prices have climbed significantly. The average sticker price for a new car in 1972 was $3,690. That accounts to roughly $26,100 in current dollars. Since then, prices have risen 85%, the average car costing $48,200. The fight against inflation has caused central banks around the world to raise rates continuously this year, causing much strain on the economy. The US Federal Reserve, the European Central Bank, Bank of England, and the Swiss National Bank all raised interest rates by 50 basis points last week, in line with expectations. Last week's hike by the Fed hiked its benchmark rate by 50 basis points to its highest level in 15 years. The Fed's Jerome Powell signaled that despite recent indications that inflation may have peaked, the fight to wrestle it back to manageable levels is far from over. US Treasury Secretary Janet Yellen says inflation will be much lower by the end of next year, as long as there is no unanticipated shocks to the economy. President Biden recently tweeted about the strength of the current economy, which is powering forward in full force. Of course, we understand the noise and the narrative that the elites must portray. And of course, Janet Yellen did say that we would never see another financial crisis in her lifetime a couple years ago. And we of course know what entailed the years after. Let's look at New York City. Who can really afford to pay $5,200 a month just on rent? That's not to mention the rise in other daily essentials needed to live there, like energy and utilities, which as some of the everyday needs have risen dramatically over the last year. A once attractive dream to live in New York City is now a heavy burden for many that live there. Hiring for early career professionals in New York flattened in the spring and has been declining ever since, falling roughly 30% in recent months. Even the average one-bedroom apartment in New York City costs $3,860 a month. Minimum wage workers need to work 100 hours a week just to afford rent. I understand that many of you don't live in New York City and despise even the thought of doing so. Pretty much every US major city requires minimum wage workers to work crazy hours to afford rent. In Dallas, it's estimated that you need to work 120 hours a week, a minimum wage rate of $7.25. In San Jose, California, you need to work 141 hours a week at a minimum wage rate of $16.20. Even in Houston, Texas, you would need to work 104 hours a week at an average minimum wage of $7.25. Last year, the cost of rent rose 14% nationally, with some cities seeing rent increases as high as 40%. Out of 50 cities across America, there were only 2 cities on the list where workers earning minimum wage could afford to work less than 50 hours a week, which were Tucson, Arizona, and Buffalo, New York. This is a vast difference at what conditions were like in the past, when majority of minimum wage earners in 1968 could support family of 3 above the poverty line. As of November this year, 63% of Americans were living paycheck to paycheck. This is up from 60% the previous month and near the 64% historic high hit in March. Even high-income earners are under pressure. The report found that of those earning more than six figures, 47% reported living paycheck to paycheck. More consumers are now relying on credit cards to get by, which has helped propel total credit card debt to $930 billion in the third quarter. That's just short of the all-time record. Credit card balances have jumped more than 15% from the same time last year, the largest annual jump in more than 20 years. Comparing the same time as last year, 32% of all consumers are now saving less than they were before. Meanwhile, high inflation and high interest rates are making it harder than ever to pay down credit card debt. Among Americans who carry credit card debt, from month to month, 60% have been in credit card debt for at least a year. This is very concerning and not a good sign for the economy. Approximately 86% of Americans want to own their own home, according to Cato Institute. Recent statistics show just how bleak of an outlook that is for some people. According to a report by Cato Institute, 55% of homeowners say they couldn't afford to purchase their own home today based on current prices. This share rises to 73% of Americans who think that average people in their communities can't afford to buy homes. Even more, a similar share, 69%, worry that their kids or grandkids won't be able to afford homes someday.
Fed's interest rate hikes will push the U.S. economy into a 1990s-style recession starting in the spring. This is just the latest in a recent string of warnings.
I still think that because of the affordability squeeze, both with high interest rates and also high prices, a recession next year is almost inevitable.
The US economy is likely to enter a recession in 2023 if it's not already in one today. The default rate for US companies will soar to 3.75% if the Federal Reserve's fight against inflation results in a shallow recession, according to the S&P Global Ratings. According to a survey of 400 leaders of large US companies by consulting firm KPMG, a whopping 91% are predicting a recession in the next 12 months. We've seen major job cuts at major companies around America this year. Just recently, big banks are the ones cutting thousands of its workers. Goldman Sachs is expected to cut 4,000, Morgan Stanley expected to cut 1,600, and just recently we saw Wells Fargo lay off hundreds of employees. When big banks sound alarm over the economy, we must take notice. These are the institutions which essentially control the financial landscape of America. It is clear that the American dream of achieving success and prosperity through hard work, determination, and initiative is getting practically impossible. More than half of Americans are living paycheck to paycheck, barely making ends meet. Hence, it's clear that the American dream is now a past phenomenon.